Join us now on what the charts, what the technicals are indicating in the markets. Katie Stockton, Fairlead Strategies, a founder and managing partner. I said the same thing to Tom Lee. You both were looking for some near-term angst, I think, in equities and not a move higher. And I think it sort of confirmed what you were looking for. Is it? Are we still in that period?
I think so, yeah. I mean, January was pretty firm for the major indices, and we had this tug of war almost, right?
They ended a little bit higher, but we don't feel like they ended higher.
It doesn't feel that way, yeah. Sentiment isn't great right now, and I think reasonably so, because we do have all this volatility external to equities and even internal to it on the individual stock level. So this is an environment in which people are on edge. And we just like to keep it very disciplined in this environment where we're watching support levels. For the S&P 500, this 6730 area is key support for us. Below that, risk does increase quite dramatically because the 200-day moving average is far below. And more important support is around 6130. So we really don't want to see a breakdown. And unfortunately, some risk assets do seem to be breaking down, like Bitcoin.
Bitcoin, and what about tech stocks, AI? The leaders from last year, do they have more consolidating to do? Can the markets move higher without the leadership?
Yeah, you know, I think it's probably an environment in which we want to respect the long-term uptrends, and AI certainly is that. Some of which have gone somewhat parabolic, right? We had, and now, of course, gold and silver are exemplary of what can happen in a parabolic uptrend. They get resolved through these pretty dramatic pullbacks, not even just consolidation. So I think volatility is pretty normal with these very steep uptrends, and yet it becomes healthy ultimately. For the price of gold and silver, we're calling for 8 to 9 more weeks of corrective action. Maybe it's more sideways to lower than this initial downdraft. And I wouldn't be surprised to see the same from some of the AI companies, but the market's been a little different, I think, than early Q4, where it's treating the stocks as individual companies as opposed to part of a complex. So the mega caps used to be treated together, and now we've seen some massive dispersion amongst the mega caps. And I would imagine in the AI trade, there's some of that too.
And what we hit support that you talked about on Bitcoin and went through it. Did it go through it to the point where it's indicating new support levels down in the 60s?
Yeah, it is actually. So if the breakdown that we saw over the past week or so is confirmed, and we have these pretty explosive moves on the macro front, so we want to make sure we always wait for confirmation. But if we see Bitcoin close below about 89,000, which seems like it's a foregone conclusion at this point, that would confirm a breakdown below what we would define as the cyclical uptrend. The weekly cloud model that we track, which has been very reliable as a gauge of support, the fact that it was breached is certainly a long-term setback. We already know that there's been a loss of long-term momentum behind Bitcoin, but what it tells us, or what it would affirm if it's confirmed, is that the cyclical uptrend has reversed, and now either we're in a big, wide, volatile trading range, or something worse than that, i.e. a bear market cycle. And that means each relief rally should give us a lower high. Next support is around 70,000. And below that, it's just shy of 58,000. That 58,000 level, it is, somewhat dramatically far below, but these cryptos are
125 to 77. So you say we could eventually hit a bear. That doesn't qualify as a bear market
it
yet?
does, yeah. By some metrics, for sure, just not based on this
People
one model.
said it no longer needs the 80% pullbacks. Maybe it now gets 40% pullbacks.
Well, I guess it's a more mature market now.
Do you think 40 would do it, or do you think is 80 possible again? What's 80, 20% of 125? That would get to 25,000 if it was an 80% pullback.
Yeah, that would be pretty dramatic downside, and that would be out of line with what we're seeing in our indicators at this time.
Right.
What we refer to that end is the long-term overbought, oversold metrics.
Think you would see some unwinding.
I would think.
Well, that's the question that I've always been concerned about, and I just don't know where the
strategy and
where's this invisible line in your chart?
Yeah. Well, I would say what we look for is not exactly a level, but a setup. So we want to see a long-term oversold condition and a little stabilization. That's what tells us to get back in, and obviously it's going to take some time to get there.